S.D. Bullion.
This is the Doc with SilverDoctors.com. Joining us today is one of our favorite guests, gold and silver expert Eric Sprott, the CEO of Sprott Asset Management and Sprott Money. It's great to have you back with us again, Eric.
Well, Doc, great to be here, and congratulations to you on creating such a wonderful. It's really important that a site like yours, which is so focused on silver, is available to the public, and I'm happy for you that you have so many viewers every day.
Well, thanks, Eric. Why don't we start by getting your take on the current month-long correction in gold and silver. A record of 1.88 billion ounces of paper silver traded Tuesday on the COMEX. I actually just looked before this interview. They actually revised that number down a little bit. I've never seen such a big revision by the CME. But anyways, is this the beginning of a 2008-like collapse, or as Jim Sinclair has suggested, is this the last major shakeout prior to major bull moves for gold and silver?
Well, it's getting chaotic out there in the financial world, okay? We have, worldwide economic recession. We have governments that have hugely overborrowed. We have so much printing of money, it's surreal, really. And interestingly, through this whole time, the price of gold and silver has gone down, which I find incredibly unusual, because all the data that you and I and other people in the precious metals business look to on a physical basis is Marty. So I've always surmised that because it's so chaotic, and because Paul Volcker used the words back in 1988, and he said the mistake we made was not getting control of the gold price. Of course, the gold price at that time had gone from $35 in 1971 to $850 a mere 9 years later. And of course, you ended up with double-digit inflation, because I certainly believe that precious metals are the tell on the irresponsibility of the central planners. And I think that the central planners would know that these are massively unusual and irresponsible, but it's the only thing they can do. They got to keep interest rates down, because any uptick in interest rates, and all governments would face almost immediate bankruptcy because they wouldn't be able to afford the interest. So we're living in very unusual times. We see incredible volumes in the paper markets in silver and gold, which obviously bear no relationship between what's going on in the real world when you trade, 1 year's silver in a day, or in fact, yesterday I think we traded 1 year's worth of gold production in a day, which is absolutely ridiculous. And I always ask people, think about the guy who was selling it. What's he thinking about? How man delivering gold into the market? But there you go. They just trade the paper like it's a real thing. And of course, as you and your readers know, it's not the real thing. There's a whole other market out there which ultimately will determine the price.
Well, why don't we talk about that other market? Even prior to this current correction in gold and silver, we've just seen massive physical demand to start 2013.
Right.
The U.S. Mint has already sold nearly 10 million Silver Eagles in just over a month and a half. The Canadian Mint is reportedly allocating the maple sales due to extreme demand, and yet sentiment is some of the worst I've seen in probably over 10 years in the bull market, at least since 2008.
Sure.
The price is now dipped back into the 20s. So what do you make of the signs of the physical silver demand, yet in the face of the unimpressive price action, and what do you think is behind it?
Well, as we all know, there's the paper market and the physical market, and as you've correctly pointed out, and the demand for coins, both gold and silver, has been stunning. I think the most important thing to a silver owner is to look at the U.S. Mint statistics and see how much silver was sold and how much gold is sold. And for the years 11, 12, and certainly so far this year, the U.S. Mint sells 50 times more ounces of silver than they sell in gold. And we know that the amount of silver produced in the world is only 11 times greater than the amount of gold produced in the world in a year. We also know that there's 150 times more dollars of gold in inventory than there are dollars of silver in inventory. So when people are buying it at a rate of 50 to 1, and I'm using the Mint as one proxy, I can also use our own trust. When we did our last tranche of the silver trust, last tranche of the gold trust, we essentially bought 50 times more silver than gold. And this is people expressing their views. We don't force people to buy our trust. Nobody forces them to buy from the mint, but that's the ratio that they're buying them at. And when I talk to bullion dealers, my favorite question: what percent of your business is in silver? What percent of your business is in dollars? And almost to a man, the answer is 50-50. So how long can people buy 50 times more silver than gold? It's because for investment purposes, it's really only available on a 3-to-1 basis, because most silver is used for industrial uses, whereas most gold is used for investment.
Right, and I think I saw actually the latest number for the output out of the actual mines is around 9-to-1, so even of silver to gold, so it's even narrowed a little bit from the recent 11 or 12-to-1. So just how tight is the physical market right now, Eric? I know you've mentioned when we talked previously that one of your goals is to not be able to get the last bar for one of your follow-on offerings. I think there's coming a time here now that you might be able to achieve that goal.
Well, it's always one of my dreams, because obviously I think some of the things that somebody in the precious metal market might hope for: one, money printing. I mean, who would have imagined when you got involved in 2000, the year 2000, that we'd be seeing money printing in 2008, 19, and so on. And then we see bank runs, and all the while, which are the two most wonderful things for a precious metals owner, because those are the reasons you own precious metals. And then you see the physical demand coming through. I mean, these are the perfect things that we want to see. So as long as that continues, we're going to be okay. Someday it will break. I don't know what's going to break, and to be quite honest. I mean, is there going to be a COMEX default? Is there going to be some industrial user say that he can't get enough silver to produce his iPhones or his S3s or something like that? I think you had the article about one of the car makers was stocking silver in Switzerland. So I don't know how tight it is. I mean, I have to read all the anecdotal information you have, and of course, I guess the most obvious one is what you just mentioned. The U.S. mints are running out of blanks, so it's got to be tight. We know that the COMEX bears no relationship to what's going on in the real world, but seemingly that determines the price. But someday, physical demand, which it probably already has, exceeds physical supply, and it's only a matter of breaking the backs of the short sellers on COMEX and or the LBMA or the double, triple, quintuple counting of how much gold people think they own. I don't know when that's going to happen. All I know is if I had a choice to buy bonds, to buy stocks, or to own precious metals, I know exactly what I'd do, because over time, we know we're going to win the race.
Right. Why don't we shift gears a little bit and talk about gold repatriation? The big story this week so far, Eric, is that the Treasury Department has released the results of really a 3-year-long audit of the Treasury's 34,000 and change gold bars held at the New York Fed. It's roughly 466 tons. And the LA Times story on the audit emphasizes the fact that 3 of the batches tested were actually more pure than they originally thought, so they increased the Treasury's gold stores by something like 34 or 37 ounces. But what really struck me is the fact that we now have the official government denial that anything is amiss regarding the gold stored at the New York Fed. So what's your take, Eric, on the Treasury releasing the results of their gold audit, particularly as it comes like a month after Germany requested the repatriation of their gold? So does this all but confirm our worst fears?
Well, Doc, I read the so-called audit report, and it really said they audited the schedule of holdings, which I don't even know what that means, the schedule of holdings. I mean, I think there's no doubt that, and by the way, what the Federal Reserve Bank of New York owns is a very, very, very small fraction of the total gold, theoretically, that's owned by the U.S. government. And in fact, the gold owned by the Fed might be German gold. And maybe the Germans might be surprised to find out there's only 350 tons in the New York Fed when it's all supposed to be theirs.
Right.
So it was a sham, okay? And it's just another one of these examples of those people who are trying to keep things together, misleading us as to what is really going on. And you can cite so many examples of things that are just not right and where they're totally misreported. And let me give you the biggest example of that. On Jan 17th, the Department of the Treasury issued their, what they call their Generally Accepted Accounting Principles budget deficit, and it was $6.9 trillion. That's the present value, the change in present value of your obligations in 1 year, plus the cash deficit, the total $6.9 trillion. And this in an economy that's a $16 trillion economy, where politicians fight over whether they can save $100 billion a year, and the deficit was $6.9 trillion. And what I find most interesting about that number, you will not see it recorded anywhere in the public press. You would think it would be something that might be deserved of some comment, but if you Google GAAP budget deficit 2012, you will not find it in any public news release anywhere, even though it was released by the Department of the Treasury. So it's like we're just ignoring the biggest elephant in the room here, and that just seems to be the way they want to work it. So more disinformation.
Right. And I wanted to give you a little bit of props as well. In your October Markets at a Glance newsletter titled, Do Western Central Banks Have Any Gold Left? You made the case the large majority of Western banks, central banks, 23,000 tons of official gold reserves had likely been leased and rehypothecated and essentially are now just paper entries on balance sheets. It was only a few weeks later that Germany began completely changing their stance, and previously they insisted that their gold was fine at the Fed, and they changed their mind and started the process of, first it was 150 tons, and now in a month ago they increased to over 300 tons from the New York Fed, and I think 300 plus from the Bank of France as well. So it certainly looks like to me that you may have played an influential role in Germany's decision.
Well, every time I look at the gold data, you see more and more and more buying of physical gold all the time. We saw China. I mean, if I analyzed what happened in China in their last reported number, that those are the exports from Hong Kong into China. And if I annualize the Indian purchases that were tons in the month of January, my goodness, the shortage that we would have in physical gold, I calculated 2,300 tons per year. That shortage would be substantially higher. And I might add that I don't get to see data on what people who buy bars, we don't get to see that data. We don't know what Russian billionaires have done. We don't know what the Saudi sheiks have done. For example, when the University of Texas teachers bought $900 million of gold, that's not an item where we see the transaction in the public domain. So I suspect the shortage is well above the number I calculated, because I can only work with public data. So as you know, the gold market's around a 4,000-ton market. And we've seen this change of, 23 to 2,400 tons per year. Where's the gold coming from? How does China import 95 net tons of gold in a month when the mines ex-China only produce 180? They bought 50% of the world's gold. Then I turn around and read that India bought 100 tons of gold in January, which is over 50% of the gold that's available per month. So I don't know where, and the U.S. government has to be selling. We saw the Department of the Treasury customs report for December, where the U.S. government was an exporter of $4 billion worth of gold. They call it non-monetary gold, by the way, which is 2.5 million ounces in a month. Well, the U.S. only produces 8.8 million ounces in a year. Where do you come up with 2.5 million ounces? And most of the gold that is produced in the U.S. is consumed in the U.S. There's not much left over for export. So, and I think last year the U.S. government was 250 tons of gold. Like, where does 250 tons of gold come from? There's no excess gold that's available other than what might have been at central banks, might have been the German gold, might have been the Austrian gold, might have been the Dutch gold. And all my analysis tells me that's what's happening. These Western central banks, where the guys trying to solve the problem, have been huge, non-transparent sellers of gold.
And let's talk a little bit about where the gold's going. China last updated its official gold reserves, I believe it was in 2009, and their last official statistic is 1,054 tons. But they imported something like, I think, 900 tons just in 2012 alone. So I'm anticipating, in the next time China updates their official statistics, the market could be absolutely shocked by the total that China updates it to. What are your thoughts on how much China has accumulated and actually has accumulated, and the next time they update their statistics, what we might see?
Well, Doc, I don't think they're going to up the statistics, okay? I think, if you and I were running the financial affairs of China, we would want to be selling treasuries and buying gold. But we don't want people to know that we're selling treasuries and buying gold, simply because they want to buy as much gold as cheap as they can. And to me, it's obviously a godsend to them that the price is where it is. And you mentioned about 900 tons of gold. I would venture to say that 3 years ago, they probably didn't even buy 100 tons of gold. So you have an 800-ton buyer come into the market in a 4,000 market, and the price goes down, which is it's an impossibility. Almost about 25%. They took 25% of a market. And I always like to say, well, what if the Chinese bought 25% of the more of the oil market, or 25% of the wheat market? Wouldn't people think there might be a problem? Or how could you do that? Is it even physically possible? And the data we get from China is only from Hong Kong. We don't know what gold is going from, Switzerland into Beijing, or Canada to Beijing. We only know what goes from Hong Kong into China. And I know that there's lots of gold coming in that doesn't go through Hong Kong. So who knows what the reserves are? I don't think we're going to see until there's some kind of collapse in the system, or they want to make their move in terms of backing the yuan with gold. And that could be some time now. I'm sure they're just as happy to sit there and accumulate gold at these prices, and we know it must be coming from the Western central banks.
Right. All right, well, let's switch topics again here. Sprott recently launched physical platinum and palladium trusts to go along with your gold and silver trusts. And we've seen both platinum and palladium really go on a tear over the last few months. I think platinum's already up over $200 for the year, and palladium around $100. Do you still think silver is the investment of the decade, Eric?
Well, I do. But I should say, Doc, I am not a student of the platinum and palladium markets, okay? I don't spend, multi-hours per day looking at that. Rick Rule and other people in our office in Toronto are the people who we've charged with understanding that market. I think they've got a really good grasp of it. I mean, all the data that we see, and I just get on a sort of a macro basis. I don't get into the minutiae of how much it was for car production and jewelry and things like that. But the macro data, the problems in South Africa, the purchasing of platinum and palladium for investment purposes are all moving up here. I'm actually a little stunned that the price hasn't moved more than it is, because we have an absolute, in my mind, we have an absolute shortage of the two commodities. So there's no telling where the price can go when somebody wants that last bar of platinum or palladium that they're not going to get. So I think the outlook for those two metals is great, but it certainly doesn't diminish any of my fervor towards the silver market. I still think silver will be, as a precious metal, I think silver is more precious than platinum and palladium, be the investment of the decade. So
silver is still the investment of the decade, but good diversification throughout physical assets.
Well, I think anybody paper assets. And when I look at the government debt, I mean, do I really believe that I'm going to get paid back in real value when that bond matures? I get paid nothing to hold it, and I have to count on a government that says they're solvent when the data we look at says they're not solvent. I mean, if you look at the present value of unfunded liabilities, I think the number is something like $40 trillion right now. So, and the debt, it's 56, close to $60 trillion of debt in a $16 trillion GDP economy, and there's no way that those debts are going to be paid off with anything that represents the real value that one used in buying it. They'll get way less value. So you have to own physical things, and silver and gold are the primary ones. Gold, of course, is by far the bigger market, and more money will go into it. But I think silver has a massive sort of outperforming gold simply because of these ratios we talk about. You know, it's only available, as you say, let's say 10 to 1 or 9 to 1. The inventories are in a ratio of $150 in terms of gold versus silver. And yet we see people spending the same amounts of money on gold and silver. So silver should go back to that 16 to 1 ratio. So the gold at 1,600 should be at $100. You know, I certainly imagine that gold goes much, much higher here. If it went to, for example, 3,200, price of silver would be 200, and that's these sorts of moves that you expect. But you know, you can't pick a top on these things, and the reason is we have so much money printing so fast that it's impossible to calculate where it should be because we don't know in the future what these governments are going to do. But all we know is the price should be up massively. Anybody who's been a student of the market sees these ridiculous trading that's on. Someday they'll be brought to their knees by people just taking delivery, and I hope it happens sooner rather than later. And when you look at, for example, the February, every day in February so far now, we keep getting new people nominating for delivery. I think yesterday was an extra 300,000 ounces of silver. In a contract that's a very minor contract, but people are going in and taking physical delivery. Sooner or later, the problem's going to manifest itself, and who knows what happens that day. I always worry, Doc, that you end up being right one day, and they just stop the market, and they stop trading in stocks, and they say we're going to stop trading in silver and gold. I mean, we'll be absolutely correct, but they may take the market function away from it in terms of the market we're supposed to trade in. But certainly in the black market, gold and silver will be worth as much as they've always been in the history and will buy you what you need. So I'm no concerned about holding gold and silver.
Right. And I can confirm from what we've seen at SD Bullion, as you mentioned, a lot of the dealers you talked to, that the ratio is about 1 to 1. And I'd say even since around the beginning of the year, beginning of January, maybe late December, that percentage has actually increased quite dramatically. We're probably at about 2.5 times the dollar value of silver right now that investors are putting into physical gold, which is simply mind-boggling.
Right. Yeah. And I can tell you from Sprott Money's point of view, we sell both gold and silver, that our ratio would be above 50-50 as well. But then again, we have a little tilt towards silver, as you do, and therefore I don't use that as a proxy. I'd much rather use the more public items where you and I aren't influencing the decision.
All right. You wrote last year, Eric, that the recovery had no close, and that call was absolutely spot on. There was a report last week, I'm not sure if you saw, but the report stated that the Fed has purchased more debt in 2013 than the Treasury has issued.
Yes.
So I wanted to gauge your thoughts on how do you see this all ending for the U.S.? Will we simply end up with 2 lost decades like the Japanese? Are we going to actually see a hyperinflation of the dollar? Or will China one day announce official gold reserves of something crazy like 10 or 15,000 tons and introduce a new gold-backed renminbi? Or how do you see this whole financial crisis ending?
Sure. Well, as you said at the outset, will we lose 2 decades? I might argue we've already lost 1 decade. That if you ask 70% of the population, are they better off? The answer will be no, and it's probably a lot higher than 70. And here into 2030, we have a 2% tax increase. We got possible sequestration. I mean, it is. You read the words from Walmart that the email that's slipped out that their February sales so far were a total disaster. That boy, were we ever happy to get January over because it was a lousy month. It's taking its toll here. And we're printing all this money, we're spending all this money, and where do we stand today? We stand in almost a worldwide recession after all those moves. What more can we do to turn the economy around? It's just not turning around. And yes, I suggest the recovery had no close because you could see that there were some temporary things that were fueling the optimism early in 2012. Those things all faded as we ended the year. We ended up with a negative print on GDP. We're going to start this year with a negative print on GDP. And I wrote another article last year saying weakness begets weakness. And So, for example, if somebody lays off 5,000 employees, not just those 5,000 employees that get impacted, it's the people who's relied on those people to buy goods from them that also get impacted. And there's only one way that weakness won't beget weakness. That is, you have to have outside measures come in terms of fiscal policy or monetary policy. And in terms of fiscal policy, we have no room for fiscal policy initiatives anywhere. I mean, here we are arguing about sequestration and how much spending we're going to cut. There's no fiscal stimulus. Now let's move on to financial stimulus. We have zero interest rates, and we're buying $85 billion of our own bonds a month. We buy every bond we issue. How much further can we go here? I mean, there's nothing left to try. The printing of money has been a total failure, other than keeping the financial system looking calm. You know, I can assure you, it's not calm, but it looks calm, and it'll look calm until one day we all figure out that we're just going down this slippery path of greater debt, greater money printing, and people will figure out, I don't want to own these bonds because they know exactly how this thing's going to end.
All right, yeah, I couldn't agree more. All right, well, it's always great to have you back, Eric. We really appreciate you taking the time again this morning, and we'll look forward to talking to you soon. Eric Sprott of Sprott Asset Management and Sprott Money.
Okay, Doc, all the best. Keep up the great work on your site there. It's wonderful.
Thanks, Eric. We'll look forward to talking to you again soon.